Okay, well, welcome to this short presentation about the support that is available for small businesses in New South Wales after this current lockdown. My name is Suzanne Walker, and I'm doing this presentation as part of the Chamber Collective, which is a group of small businesses that meet every fortnight to talk about business issues, learn from each other, and it's a really great supportive networking group as well. So if you are interested in joining the collective chamber group, then contact Neil Puri or Stacey from the chamber, and it is free for gold members. So you would need to upgrade your membership to gold. So we're going to talk about the support that is available and help you understand what the criteria is. So my name is Suzanne Walker from Clearpath Accounting, and for this is my current team at the moment. There's two that are not there because they're remote workers, but we offer taxation, accounting and business advisory services as well. So the thought for the day is that not the strongest of the species that survives, nor the most intelligent, but the one that is most adaptable to change. And I think that's really relevant to small business owners at this point in time. So what's on the agenda? We're going to talk about what's on offer, how the revenue difference is measured, the criteria for small business, the criteria for tourism and hospitality sector. There's some payroll tax deferrals available. And we're going to talk quickly about the Dine and Discover vouchers. I'll talk about what your next steps should be if you believe that you're eligible for the grants, and any questions that you may have. So what assistance is available? So if you have a business and your turnover has dropped by, there's three different levels, by 70% or more, then you're going to be eligible for a $10,000 cash payment. If your drop in revenue is between 50% and 69%, then you'll be eligible for the $7,000 cash payment. If your business turnover has dropped by 30 to 49%, then you'll be eligible for $5,000 cash payment. Now, this is available to small business, sole traders, and not-for-profit organisations. And these grants really, they should be used for business expenses such as rent, utilities, wages. I'm not sure how they're going to police that. Basically, if there was ever a review, they would want to see that you spent that money on business expenses and not just receive the cash and then take it out as personal funds. So spend it on business expenses. So how is the drop in revenue measured? So it's going to be measured over a minimum of a 2-week period. All right, so the measurement can start from the 26th of June. So that means the first measurement period would be from the 26th of June to the 10th of July. And we're measuring it to an equivalent period in the 2019 year, so 2 years ago, which is a really great idea because for those businesses that had a drop last year because of COVID, we don't want to see that extra drop again. So I think it'll be easier for businesses to meet that criteria. So there's two different streams available, one for small business and one for the tourism and hospitality sector, obviously being the most heavily impacted. So the small business eligibility criteria. To receive the grant, you must have turnover of more than 75,000. Now, so that means usually you would be registered for GST. The wages, if you pay them, they must be below the payroll tax threshold of 1.2 million. you've got fewer than 20 full-time equivalent employees. You will need a statement prepared by your accountant to confirm your loss in revenue, all right? And then your business must primarily operate in New South Wales. Now, this is available for all parts of New South Wales and not just Sydney, okay? So for the tourism and hospitality sector, again, your turnover must be more than $75,000. Your wages must be below the $10 million mark. So they're making that really high and really easily met for the tourism and hospitality sector businesses. You'll also need a statement from your accountant to confirm that loss in revenue. And your business must also primarily operate in New South Wales. Now, that statement from the accountant should be on the accountant's letterhead, so you'll have to give them notice about when you want or when you think you've met that criteria. So with payroll tax, the deferral to me isn't that great. The only deferral available is the due date for the lodgement and payment of the 2001 annual payroll tax reconciliation. And that's usually due in July, but that is now extended to the 30th of August, 2021. This is available for all businesses in New South Wales that are paying the payroll tax, but the deferral is optional. So if you believe that you've got enough funds to pay your payroll tax, I would highly recommend that you get that sorted and paid nice and early. So the Dine and Discover vouchers, they have been extended. So for another month, so they are now valid until the end of August, so 31st of August 2021. They've also announced that the vouchers can be used for takeaway, so long as the customers use the QR codes to check into that business when they're picking up the food. So it's not for delivery. So what are your next steps? The grants will be paid apparently from the 19th of July this year. So, you know, they haven't opened up the application on the website yet, but just watch that space. Assessment, just a reminder that your assessment should be compared to the revenue in July 2019, so 2 years ago, not from last year. Ask your accountant to help you with the assessment of the criteria and to prepare the statement to confirm that eligibility. You'll have to apply for the grant through the New South Wales website using your own login and password, so your accountant cannot do that for you. Okay, and if you are really significantly experiencing significant loss in revenue or financial hardship, I actually do recommend that you approach your landlord and your financial institutions for discussions or deferrals of payments, because it has been advised that that's a strategy that should be used for businesses that are really struggling. And that's basically it. So that's all the information that we've got at this point. I don't think it's too confusing, or that's my perception, but are there any questions about the grants that are available or your eligibility criteria or the process?
I have a question, Suzanne.
Yeah.
That's probably for businesses that, so if you've had a significant increase in revenue since 2019, so for instance,
yes,
say your revenue in May 2021 is 50 or 60% higher than May in 2019. Does July 2019 need to be the comparison, or can you compare it to kind of your new normal?
No, so the new normal, no, definitely not. So if you're comparing it would have to start from the 26th of June, that measurement period, at least a minimum of 2 weeks. and we've got to approve either 30% drop, well, from 30%. So as soon as you hit that 30% drop in revenue compared to 2 years ago, no matter what your new normal is, it won't matter.
Yep. Okay.
So what they're looking for businesses that were generally trading at a healthy level and then impacted significantly by COVID.
Cool. Thank you.
I have a question. In conveyancing, I don't actually get paid until settlement. So these 2 weeks, I'm very busy doing work that I started months ago. But as far as new clients coming in, nothing. So I don't know how I can reflect that.
The only thing that we don't really know is when they're going to have this cut-off period of time. They're only mentioning July turnover to measure July. So I don't know whether they're going to extend that at this point, but you would have to start measuring from the 26th of June, the first measurement period till the 10th of July. Just have a look at your Xero, your QuickBooks Online, your MYOB, however you're measuring it, and then have a look. Now, I know last time you could do it on a cash basis, so you might be lucky enough to get a reduced amount of cash compared to the 2019 year for that 2-week period of time.
Okay, thank you.
Does that answer your question?
Yes and no. It's just that I've got money coming in at the moment, but it's from work from, 6-8 weeks ago.
Yeah.
As far as a new client.
Last time, so with JobKeeper, they allowed you to do cash or accrual accounting. So I don't know whether that would help you. I don't know whether that's available at this point, but I can find out for you and send you an email. So
thank you.
What we don't know is what measurement can we use? Is it an accrual where you've issued the invoice but you have not yet been paid? Or is it cash only, so cash in the bank?
Thank you. All right. My accountant should be all over it, but we'll see. Thank you. Should be.
Pleasure. As soon as I find that out, I'll just put an email out.
Thank you.
What happens in the case of a small business that might be sort of just over that turnover threshold, but doesn't actually have an accountant, and in terms of all other criteria, they're eligible for the grant, but they don't have an accountant? Maybe they do their own books.
My first question, Simon, is why don't they have an accountant? Are they crazy?
Possibly. This is in theory. I'm not sure, who that business might be, but if there was one.
Yeah. Look, the only evidence criteria that they're asking for is a letter from the accountant. And if they've been through COVID and they've been operating and they've been applying for previous grants, I'm not sure how the proof was provided, but the letter from the accountant was needed for all other New South Wales grants, including the bushfire grants, etc. So good question, Simon.
Is it a standalone service that an accountant could provide? So if a business thinks they're eligible, could they rock up to an accountant, for example, and say, hey, I need you to have a look at my revenue figures and issue me with this letter?
Look, if they're happy to do that, most definitely, yes. But I personally wouldn't. Only because I want to nurture I'm looking for relationships. But yes, go to an accountant and ask them. You would have to prove, so that you would have to give them access to your accounting records, whatever that may be. So there is a little bit of an effort needed by the accountant for proof. They're not just going to sign a letter.
Yeah, no, I mean, I don't have anybody in particular that I'm thinking of, but I'm sure there's going to be small businesses out there that have kind of muddled through doing their own books, and this is going to catch them out.
That's right. Yeah.
Suzanne, I had a question. If the business started within the last 2 years and doesn't have that history from 2 years ago, is there anything around the rules around that, or how that should be dealt with?
They haven't announced anything, but I know last time we were able to use an alternative period. So they might say, all right, if you weren't operating 2 years ago, we might say we might measure the same period last year. Details on that have not been confirmed. So the alternative period, I'm sure, will be available. I just don't know what the that looks like.
Okay, thanks.
Any other questions?
Hi, Suzanne. Two of my clients were actually in a business together, and they split out in December. They were actually operating for multiple years beforehand as a joint business, but have recently, as of December, split into two separate entities. What's the sort of story that they're likely to face?
Good question, but I'm guessing that they will also need to have an alternative period comparison with their existing business. Unless they say, so you can do, so that's why the accountant's letter is basically critical for these type of businesses. We might be able to put a case forward to say, look, this is how the business was operating 2 years ago. It was jointly. We might be able to come up with a way that we split the income that was earned by the two partners, and now they've gone separated. So there would be an explanation in the letter by the accountant to say why we think they're eligible for the grant. Yeah.
In their case, it's actually theoretical because they're actually doing significantly better as separate entities.
Yeah. Okay, so they won't get the grant. Yeah. Anyone else got any questions?
No, I think that's been fantastic, Suzanne.
Can I just ask, Suzanne, can you go back to the eligibility criteria slide?
Sure.
Thank you.
Go back. For small business, this one here?
Yep.
Yep.
So what, did you talk about what period they're going to measure?
Yes. So that was
sorry, Catherine quickly called me and I had to take a call.
Oh, no, that's okay. So the drop in revenue is measured over a minimum of a 2-week period of time.
Okay.
So, and that 2-week period can start from the 26th of June. So you might say, all right, well, let's measure the first 2-week period. And then, we would just monitor that for the whole month of July. That's what we would be doing for our clients. As soon as you've met a minimum of 30% drop, then you would make that application.
Okay.
Okay. Now, as I said, that equivalent period comparison is the 2019 year, not the 2020 year.
Yep.
Yeah. And I do believe that even though it's a minimum of a 2-week period of time, you might be able to stretch it out to that measurement period to a month. I'm not sure. We just got to show that 30% drop minimum.
Okay.
I have another question, Suzanne, if that's all right.
Yeah.
So for businesses who do pay payroll tax, besides the deferral, there's no kind of actual subsidy available for them?
No, so they haven't reduced the payroll tax at all for those businesses. It's only the annual reconciliation payment and lodgement of the payroll tax for 2021. Okay. Usually due in July, now due at the 30th of August.
Okay.
Excellent, Suzanne. We might wrap that up there, but really appreciate you putting that all together because I know it's only been a couple of days and I'm sure there's probably been announcements and clarification even up to yesterday that you've been trying to sort out to try to pull this together. So I really appreciate that.
My pleasure. Thank you, Anil. I'll just stop sharing my screen now.